today, the holdings are above the price. So there's been a lot of demand soaking up supply, yet the price has not exploded yet. When Asia comes into this thing, and they're just getting started, when they come into this thing, we can expect a lot. The first one is just a table of the performance of gold in a bunch of different currencies going back to, it's this entire century, so thus far. So just give us a little up, because one of the things, people think that gold investors are these lunatics a lot of times. They think they're a fringe crowd, and it's been the best performing asset class of this century, precious metals, with the exception of cryptos. But cryptos, remember, started at zero. And it's pretty easy to have some spectacular performance starting at zero. We'll see how well they do from here on out. I think there's still quite a bit of room to run in cryptos. But gold is something that has a history that goes back thousands of years. And, you can track it, you can rely on it, and you know that there are certain periods of time whenever the economy and currencies get abused. There are these certain periods of time where gold lays in wait and then catches up. And we're in one of those right now, and we have been since the beginning of the century. It is making people rich. It's making them rich not very, very quickly, but sort of slowly and methodically. I want to point out to the viewers, take a look at this chart. You've got the US dollar, the euro, the British pound, the Aussie dollar, the Canadian dollar, the Chinese yuan, the Japanese yen, the Swiss franc, and the Indian rupee. So you got 9 different currencies here. And then take a look at the amount of red on this chart versus the amount of green. And then scan down some of these columns and look at the amount of green that is double digits, way out. And remember that during a lot of this chart, there was no inflation happening. So these double digits are real. And then on top of that, you look at the average, and it's 9.2% per year for all of these currencies combined. For the US dollar, it's 9.3%. But when you compound that out, I'm going to put up a chart here in the video of the gold's performance versus the S&P 500 from the year 2000. And the S&P 500 is up 200%. Gold is up 550%. Best performing asset class of this century is precious metals, with the exception of cryptos. This is number one. And people still consider it, a lot of people consider it a lunatic fringe investment. If you have a certain percentage of your portfolio in the precious metals sector, you're just going to do better during these cycles. A lot of investment advisors will recommend 10%, but it's better to have 20 or 30%, or like me, where the vast majority is precious metals. I've way outperformed the normal investor. Yes, I see something else in this chart too that I want to point out to the viewers. It was up until about 2009 here, right after when the global financial crisis really got going. This was the vast majority of all of the ETF holdings was North America. And then you see Europe start to explode. And now Europe, you get to the end of this chart, and Europe is almost as much investment now as North America. But take a look at the light green area, Asia, and now other. Asia is just starting to get on board. And one thing about these ETFs, this is taking precious metals, and putting it in a vault, and basically sort of taking it out of the system. This is one of the big price drivers is the ETFs, because they do gobble up so much of the supplies. Now, both of these scales start at zero. So you've got the amount of holdings. This is in tons, and you've got the price of gold on the other side, and both of them start at zero. I do want to point out to the viewers that the price was above the holdings back in the 2011, 2012, when gold was peaking back then. And then today, the holdings are above the price. So there's been a lot of demand soaking up supply, yet the price has not exploded yet. When Asia comes into this thing, and they're just getting started, when they come into this thing, we can expect a lot higher prices. This will explode.